The conference organisers. I'm going to tell you about a company that produces resource companies, much the same as Ford Motor Company produces cars. Resource companies is our product. It's a cash flow business. The cycles are unfortunately longer than it takes to make a car, but ultimately these things do turn into cash and lots of it, and that's great for our shareholders. I won't dwell on the cautionary statement. Why would you invest in DGR Global? We have a diverse range of projects, jurisdictions, a diverse range of metals, and they all come together with the same philosophy, which is to think very big, use geotechnical innovations, state-of-the-art exploration approaches, and to look for those metals which are going through paradigm shifts in terms of their market demand outlook. So we're very interested in the traditional ones like copper, gas, and then some of the new commodities like lithium. So we have a set of substantial positions in a diverse range of both listed and unlisted companies. The most prominent of these, of course, is SolGold, where we just yesterday signed a deal with BHP for them to subscribe to just another 5% of the company for some $83 million Aussie, which represents around about a 30% premium to market. We like doing raisings at premiums where we can. These are driven by value arguments rather than pricing arguments. Iron Ridge looks for world-class gold systems in Chad and Ghana, and Len Kolff, the exploration manager and chief geologist, is here. He can tell you a bit about that at the DGR booth later. Tin Mining, we're looking for large cobalt deposits in southeast Queensland, and tin mining operations in Tasmania and northern New South Wales, where we're just getting going on those operations. In Armour, we're looking to replicate the success of Arrow Energy, which was done outside of the DGR stable some years ago with Stephen Bizzell. And we believe that we're regenerating an entire oil and gas province on the Roma Shelf south of Roma. And then we have a number of other unlisted base metal and gold explorers in DGR, and a number of companies where we have a controlling interest, but not 100% owned. The most exciting of which at the moment I would have to say is Army Uganda, where we think we've ultimately got about 400 million barrels of oil upside in the Albertine Graben part of the East African Rift System. So a diverse range of companies, jurisdictions and metal and other commodities that we're looking for, all with world-class Tier 1 upside. And here's the range of commodities that we're looking for in them. SolGold is the most prominent. I'll tell you a little bit about that company later without dwelling on it now, but it is set to become probably the best copper-gold resource and mining company in the world, bar none, and that is obviously something that in our view is being recognised by BHP and Newcrest. We are operational in a diverse range of exploration theatres in Africa, South America and Australia, and our assets are listed on exchanges in Australia, the UK and in Toronto. So increasingly our footprint is global. That's why we're called DGR Global, both from an exploration and a financial market point of view. We have a continual pipeline of ideas which are put together by a team of very talented resource geoscientists, and they start off just as ideas, and we gradually turn them into companies that are either going into production and or the subject of ultimate probable takeover bids. We suspect strongly that that's what's going to happen to SolGold, and of course our task is to make sure that a very high price is paid for it. We're confident of that outcome given the characteristics of the main project in SolGold, the Cascabel Gold Project. So ultimately the aim is to balance out the very significant value in DGR in its investment holdings in these subsidiary and associated companies with large slabs of cash, turn ourselves into a resource bank and pay reliable and regular dividends, which should see a significant re-rate in the market capitalisation of the company. We trade at anywhere between a 30 and a 50% discount to our net asset value. That presents to all investors a spectacular opportunity to get a good value deal at current prices, just on the basis of the mark-to-market value of our current assets. And it says nothing about the upside that's offered by what we will generate in the future. So currently we have a $95 million market cap, and the value of the assets is around about 200, as I recall. So we have recently done a lot of progress at Cascabel, and as I mentioned, raised another 83 million Aussie from BHP for another 5% of the company at a 30% premium to market. That was in the press yesterday. We're following that up with an aggressive regional program throughout Ecuador, looking for a province there rather than just a single project. We've been drilling for new lithium provinces in Iron Ridge and Dark Horse. We've drilled a well on the Roma Shelf in Mile Creek 4A, and that's a producer now. And we're expanding the Granville tin mining operation in western Tasmania, and looking at cobalt nickel project emerging in southeastern Queensland in Oztin. We have a great alliance with Tribeca. They're a resource investment fund. Ben Cleary is on our board. That's a great addition. And we have no external debt, just convertible notes of $10 million out to Tribeca. Coming up, we'll be working on a float of ARMA Uganda. We expect further re-rating in SolGold as a result of a resource upgrade that's coming out in November, and a preliminary economic analysis in next January. In ARMA, we're looking for extra tenure, extra resources, extra production and extra sales under new contracts. So a tremendous growth story there in ARMA, and in Iron Ridge and Oztin, continuing to work on new lithium provinces and cobalt projects in southeast Queensland. I've told you about Tribeca. I'm not going to dwell on it or run out of time. There's a lot to tell here, but having Tribeca looking after us from a short-term financial point of view is certainly very advantageous. The whole story about DGR and what we look for is driven by global growth and urbanisation. The world is increasingly becoming electrified in addition to the normal urbanisation push. That's driving unprecedented demand for copper. It's driving unprecedented demand for gas, and these are two of the main commodities that we focus on from a traditional point of view. And of course, the environmentally driven push for clean power means you need a lot of storage, so you need a lot of lithium, and that's why Iron Ridge and Dark Horse are looking for lithium. So it's about energy, really. Copper to transport it, lithium to store it, and gas to generate it. That's what's driving our exploration philosophy. The demand for gas is increasing very rapidly, as I mentioned, and we believe that that's going to continue to drive gas prices, especially in southeast Queensland. We're now seeing spot prices up over $10 a gigajoule, and everything above 10 terajoules a day, or 10 million cubic feet a day that we produce in ARMA, we should be able to sell into that spot market. So we're working on new well plans, new production, and really getting the most out of that Kincora gas plant for ARMA. We're going to contribute in Australia strongly to the growth globally in gas demand through LNG supplies, and that's simply going to put more and more pressure on producers to meet the demands of the domestic market in Australia. So it's happy pricing and demand upside story for ARMA Energy. So we're focusing on the the Roma Shelf south of Roma. Importantly, not only do we have the exploration licences over some 3,000 square kilometres or more than that, but we have a great social licence to operate there. Oil and gas exploration and production is well established in the area. We're selling 9 terajoules a day. Once we get over 10, we can go into those very high value spot markets, and we have the benefit of the Newstead gas storage facility, which will enable us to put gas in and take gas out very quickly to meet peak demand periods. So we currently have resources of around about 169 petajoules, and we're looking for a significant expansion of that as a result of reserves upgrades that we believe will be coming as a result of the Mile Creek 4A well, which we've just finished and is now in production, and we're looking to apply that exploration and development blueprint, if you like, across the whole of the Permian gas exploration fairway on the eastern side of the Roma Shelf. And we believe that the upside here is for somewhere between 1.5 and 3 trillion cubic feet, which will make us a very significant gas company indeed. We're also looking at new frontiers in northern Australia, in Proterozoic basins. I won't dwell on that, but we've had gas discoveries in Northern Territory and in Queensland. The best is yet to come in Armour, as it was in Arrow after a 6-year startup period. We're still in that period with Armour, and I think you can look forward to some significant growth in the future as we replicate what went on in Arrow. So I mentioned about lithium and cobalt. I'm not going to dwell on these because you'll hear more about OZ10 later from Peter Williams, but we're looking for cobalt there, lithium in Iron Ridge and Dark Horse Resources, and we're looking on a provincial basis. In Iron Ridge, I'll tell you a little bit about this. We've got a very exciting new province in Ghana and Côte d'Ivoire, getting some tremendous results there. We look like being able to define a very significant resource there in the near future, and as I say, Len Kolf will tell you about that at the DGR booth. The same goes from a provincial point of view in Chad. We've got enormous gold targets there that have the potential to deliver world-class, in fact tier 1 gold resources, and that probably explains why Iron Ridge is getting so much inquiry from gold-producing majors. I'm not going to dwell on tin and cobalt, but I'm going to tell you about copper. Copper is facing a repricing, re-rating event like it's never seen before, and as the holder of a massive project in Ecuador, that's tremendously good for SolGold. So we went there after finding that the geology and the operating environment in the Solomon Islands was just too difficult, and went to the greatest copper theatre in the world. That's the Andean Copper Belt. The northern part of it is about the same size as Chile, which covers 25% of the world's copper resources. We have that sort of exploration upside, 100% in SolGold. That's what's underscoring our claim that we will turn this company into one of the world's great copper gold majors. So it can deliver the same sorts of ore bodies as we see in northern Chile, like Chuquicamata, Escondida, Collahuasi, and we're looking for that style of exploration success. If that wasn't enough from a grade and a size point of view, look at the logistic advantages. We don't need to build a power station, a power line, a highway, a water pipeline, a desal plant, and all of the other infrastructure imposts that some of those high and dry Chilean projects have to suffer. Gives us around about a $3 billion capital advantage when we start this thing up. We've got some of the world's best porphyry copper gold exploration results, and it's got a bornite-rich core that's going to provide the basis for a high-grade starter operation. There's some of the bornite. So far we've defined 12.6 million ounces or 12.3 million ounces of gold and 5.2 million tonnes of copper. I confidently predict that sometime in the very near future that's going to double, and that will report very favourably to the net present value announcement out of the PEA, which we hope comes in January. There's a picture of the deposit. The grey is what it was, the red is what it's growing by. We're going to develop it with an underground block caving strategy. There's a schematic of that, and that's just why Newcrest is so interested in it. But we're going to replicate that all through Ecuador on 10 other projects. So we've got a whole pipeline, and as BHP said yesterday, Ecuador is set to provide the next generation of the world's copper production. So it's not just us saying it, it's BHP saying it, it's Newcrest saying it. This is a major company in the making. I'm not going to dwell on this, but we are also about to float a project in Uganda. It's in the Albertine Graben, which is part of the East African Rift System. It promises, we believe, to hold up to 400 million barrels of oil, and in the years to come should provide a very handy part of DGR Global's assets. You can come and talk to us at the booth if you like. So sorry that was a little bit long-winded, but it is a big story. We're a factory of resource companies. Thank you very much for attending, and look forward to answering any questions at the booth. Thank you.
Thank you, Nick.